Welcome to another episode of Bitcoin Mastermind podcast. So this podcast is meant for just really discussing different asset classes. And this is to help you to better understand the characteristics of different financial instruments and also the benefit of diversification. And this is to essentially help you to construct a more robust investment portfolio. So I think we're just gonna dive into today's show. James, let's go to the next slide. So as usual, we always have this disclaimer, and just want to remind everyone, this podcast is only meant for educational purposes. We are not giving financial advice on the podcast. Instead, we aim to really educate the audience to understand the fundamentals of each financial vehicles in order to make better investment decisions. So James, next slide. And another reminder is there are a couple of different components when it comes to wealth creation. So first of all is, of course, your liquid and illiquid asset, how to construct a very profitable investment portfolio. And second of all, it's your tax planning, because it's not about how much you make, it's always about how much you keep. And thirdly, insurance is always very helpful in terms of protecting your asset, as well as serving as a source of deferred tax vehicle. And finally, the trust and estate planning is to, again, help you with asset protection and also pass your wealth to the next generation or generations. So James, next slide. And another reminder is diversification is the only free lunch. So always think about how to diversify among different asset classes. To get asset allocation right can account for more than 90% of your wealth creation. And today, for example, we're going to talk about a very different asset class, specifically DeFi, which is Decentralized Finance. And we'll talk more about that. But before that, I do want to put out a couple more reminders. So first of all, feel free to post your questions in the chat box. We will be addressing this question throughout the presentation and also towards the end of the show. You can also wait until the Q&A to ask your questions live as well. Another thing is, if you want to view the podcast, if you want to view it afterwards, the recording will be available on our YouTube. So the YouTube channel, as well as our website, this recording will be also available on the website. Both links will be posted on the chat box as well. So now let's dive right into it. James, next slide. First off, I do want to introduce our speaker today. Barbara, do you want to say hi to the audience?
Good afternoon, everyone, New York time. My name is Barbara Iyayi. I'm the founder and managing partner of Unicorn Growth Capital.
Nice to have you, Barbara. So I'm sure everyone have heard a little bit about maybe Web3, maybe blockchain, maybe it's cryptocurrency, NFT, DeFi. But today we're going to talk about DeFi specifically, which again stands for Decentralized Finance. So why is it different from traditional finance, and how can it be potentially helpful to our traditional financial system? And can it really solve real world problems? So all of these questions, Barbara will help us to address today. So a little bit about Barbara. She is a builder, investor, and a thought leader in the fintech and DeFi. She is ex-JP Morgan, UBS. She got 2 degrees from Columbia, both electric engineering and computer science, and also MBA from Harvard Business School. So welcome, Barbara. Do you want to give us a little bit more of your background? And more specifically, how did you get into DeFi yourself?
Yeah, thank you for that, Nadia. And I'm really excited to be here. And I would love this to be an open conversation about DeFi. I got into DeFi fundamentally because my background has been in financial services, and my passion has been around financial technology and financial infrastructure. I started my career in investment banking at JP Morgan and UBS in New York. And then I also did some growth equity work, investing in financial institutions. So I was part of building a financial services investments platform that was listed on the London Stock Exchange. And it's through that experience where I actually invested in financial institutions. I sort of built a digital bank, did some mergers and acquisitions around banking, that I really got excited about the opportunity around financial services using technology in the African market and in these regions where there's a huge financially underserved market. And that experience is what got me into venture capital. I saw that there were, back in 2015, 14, I saw that there were a lot of innovations happening in the continent. And that's really when the VC ecosystem started springing up. And so I decided to go into venture capital and focus on fintech. One of the first companies I invested in was the largest blockchain payment platform in Nigeria. And that really got me excited about the opportunities of the blockchain. And then I also was an operator. I was part of founding a digital identity company that we expanded across Africa and Southeast Asia. Digital identity, as you can imagine, is a core foundation infrastructure for financial services and for inclusion in general. And we were using artificial intelligence, advanced neural networks to power biometrics to use for authentication and KYC. And then it was last year when I sort of decided to bring my networks together that I set up Unicorn Growth Capital. And the focus of Unicorn Growth Capital, and with respect to my background, is really about transforming financial infrastructure. And as you can imagine, DeFi is doing that in a very streamlined way and scalable way. DeFi brings in opportunities that TradFi is just not addressing. And so it's a natural extension to my focus on investing in financial infrastructure.
That's awesome. Really impressive background. Thank you for sharing that, Barbara. So maybe help the investors on this call to understand a little bit more about DeFi. What is DeFi in your mind, and why is it different from traditional, or you call it TradFi? What's the difference?
Yeah, so I'll just take a step back philosophically, and then we can get into the specifics. I think the important thing is, traditional finance has always been sort of a construct that has been defined by, the banks, the regulators, centralized authorities. The power of decentralized finance is that the power is shifts to essentially the community. And if you take a step philosophically, in a lot of countries where, like in Africa, the communities were built essentially using DeFi, in that they were built, as sort of community financial systems where people they were doing three things. They were taking ownership, in these sort of group settings. They were all, they all had stakes in these group pools, and they were able to transact with each other in a frictionless way because it was peer-to-peer. They didn't have to go through anyone else. They just transacted because they trusted each other. And three, they were able to see all the transactions happening. They didn't have to go to someone else. They didn't have to get anything audited. Everything was transparent. In a way, these philosophies around ownership, around transparency, and around frictionless peer-to-peer transactions without going to a central authority is really the underpinning of decentralized finance. The blockchain makes it scalable. And essentially what it does in the context of the financial system is that DeFi, using blockchain infrastructure, powers all aspects of financial services, from payments, lending, trading, investments, insurance, asset management. And it's doing that through open protocols that can be programmable, and essentially smart contracts. So that's really what the difference is. Now you have an automated system powering financial services versus a system that was really centralized and sort of, in a way, compared to DeFi, manual from that perspective. So that's the basics. To get into the details of traditional finance and DeFi, what I would say is, fundamentally, that I see that is transforming and driving this market is the fact that, people are fundamentally wanting to own their assets, right? The custody of assets now go into the community, now go into the hands of the people. And that is driving a whole new paradigm of financial services, right? And second of all, the decentralized nature of identity and data is becoming really important in financial services. We still haven't solved the fragmented digital identity system that we face across the world. DeFi the blockchain infrastructure can actually solve that and bring more people into financial services. Another really important part, like I mentioned before, is the fact that there's no intermediary. That can actually open up a lot of opportunities for financial inclusion and for the ability to start using data instead of human intervention in making decisions around financial services. If you think about the fact that we are still in a very unbanked, non-inclusive world when it comes to financial services, this can change the game. The program is not going to be biased. It just executes on its function, no human intervention, and it can make transactions happen. And that in itself democratizes financial services. Another key part of DeFi, obviously, is the fact that it's not fiat-based, right? That's the glaring cryptocurrency conversation that we all want to have. And every cryptocurrency is different, right? You have stable coins, you have, Bitcoin and all these different stores of value. But fundamentally, the whole point of it is that it can be stored on the blockchain and it can be transferred in a frictionless way. And then the last thing I would say in terms of the blockchain infrastructure and DeFi is the use of tokens, right? Tokens are what really powers the opportunities and the scalability of the DeFi system. The fact that you can actually start tokenizing assets, the fact that you can use tokens for governance, for ownership, for getting more rewards and getting more yield, that in itself is a whole new paradigm shift in financial services.
Got it. Thank you for that, Barbara. You mentioned a couple of key points, but I do want to take one step back. Obviously, DeFi has been, really around just for a year or so, or, a little bit more than, probably roughly 2 years, but it's growing so fast. Why do you think it's growing so drastically, and how big is it now?
Yeah, it's a good question because the value, the typical metric for the DeFi market is total value locked, which is essentially the amount of liquidity with loan collateral and with trading pools. Last year, it was about 80 billion. It got up to about 100 billion this year. And obviously, it depends on the price of crypto, and that price has gone down significantly. So that number has changed. But it is a significant amount. And, I would say 70% of that TVL comes from Ethereum, which is really what drives DeFi. Ethereum uses smart contracts, and it allows you to do a lot of these programmatable transactions that we talked about that can be applied across the gamut of financial services. And that is really, 70% of the ecosystem and then what's driving the growth. The second thing I would say that drove the mania is the fact that there's a lot of yield in this business, right? Traders are getting yield, people lending their crypto, borrowing crypto and also lending it are getting yield. That high yield environment in this low sort of yield environment that we're seeing from a macro perspective also drove a lot of opportunities in the DeFi space, right? People wanted that yield. Using tokens also give you the opportunity to get yield because you can stake your token, you can get rewards from it, and that is on top of the yield that you're getting. The other thing I would say that has driven DeFi is venture capital, right? We've seen the billions of dollars that have gone into the venture capital ecosystem. In fact, this year, there's a lot more VC dollars has actually gone in, compared to 2021, we're already overtaking what the amount of VC funding went into crypto companies in 2021. So that in itself, the dollars going into this innovation, sparking a lot of developers, building and building and building. We're seeing a lot of applications being built on all these big layer one protocols. And the usage of that has also driven the retail liquidity that has gone in and the growth of the industry.
Thank you for that. So maybe just to summarize a little bit, you need smart contract to power the technology, blockchain technology. And DeFi is growing so fast because of the reasons you mentioned, but also the tokenization of a lot of real asset is also playing a very big part. So how does it solve real world problems? You mentioned a couple of use cases already, but do people need a smartphone at least to be in DeFi? How do normal people, for example, a farmer in Africa, to be in DeFi?
Yeah, so there are many different use cases across different aspects of financial services that DeFi solves, right? The bare bone of DeFi, you can apply it to, for example, payments, right? Payments is a fundamental infrastructure that we must all have solved for the digital economy to thrive. And using stablecoins, for example, which is a core part of a core currency that is used to transfer value within the DeFi ecosystem. Stablecoins is also a great way to create frictionless payments, right? Payments in a lot of different countries are still fragmented, still frictionless, has a lot of friction and still costly. You can now use stablecoins and different types of stablecoins, fiat-backed, algorithmic-backed, but they are stable in terms of the ability to accept payments and to transfer payments. That whole ecosystem is also very disruptive, right? We're seeing merchants accepting payments because they want to get new consumers, they want to get access to yield opportunities because they can store the cryptocurrency and they can actually stake it and also get rewards. We're seeing the blockchain being used, even private blockchains, not just public blockchains, being used to power cross-border trade within banks, within fintech companies. There's a lot of opportunities in that space when it comes to payments. Another use case I would say I think was a powerful one was with market making, automated market makers. The automated market makers have done really well with DeFi, and they sort of drove the DeFi growth. Guys like Uniswap, Orcar, they are essentially automated market makers are essentially a way for people to automatically swap transactions and create liquidity pairs. That is fundamentally different to central order book. So whenever you make a transaction, prices are adjusted automatically in a automated market maker. Automated market makers are creating new ways of essentially new liquidity providers and new market makers in the ecosystem. And that is changing the paradigm. I mean, this in traditional finance, that is unheard of, that you can easily just become a market maker and you can sort of create liquidity like that. Automated market makers have democratized that. And so that is a very important use case for allowing people to be able to trade digital assets and create liquidity. And you can embed that in multiple different parts of Web3. Web3 is a much bigger form of DeFi, and you can embed this sort of automated transaction swap of assets across different aspects of Web3. And then I would say lending protocols. Lending protocols has been a very important use case. I would say it started off, and we've seen some companies go bankrupt that have been doing this. I would say it started off with a lot of people just wanting to borrow more crypto using their crypto, and I would say that has been sort of the trend and what has grown these lending protocols. But I think, and this is the opportunity with emerging markets that I'm excited to talk about today, there's a lot of lending opportunities for lending protocols to actually be used to finance real world transactions. And I think that's powerful. So we're seeing and we're investing in companies that are powering supply chain finance, working capital for SMEs, merchant credit networks, agriculture credit networks. And so these are trade transactions happening in economies and billions and trillions of dollars. And now we can bring the $2 trillion crypto liquidity into that space using DeFi and using these lending protocols. And there's a lot of infrastructure to create that, to get data off chain into the blockchain, to use all of that data to make credit decisions and to start transacting real world assets. But I think that's a huge opportunity because the credit gap in these countries are huge, trillions of dollars, and you can bring DeFi into that space and give sustainable yield to DeFi liquidity providers, which is what they really want. And I think this market has shown that sustainable yield is really important because all that volatility with crypto assets has created a lot of issues in the ecosystem. But when people are investing in lending, when lending protocols are transacting on real world assets, the yield is much more sustainable.
Got it. So you mentioned a couple of things regarding emerging markets. I was going to ask you, where do you think has the most potential? I know a lot of discussions around Africa and maybe South America adopting DeFi much faster than other markets. Can you share more of your thoughts around that? And James, go to the next slide.
Yeah, sure. So I think that fundamentally crypto was sort of made for several markets, right? Markets that have legacy institutional voids, right? It's almost like crypto was made for those markets. And I would say Africa is a great example of that. If you look at the slide, Africa is a mobile payments driven economy already. It was doing mobile payments before a lot of people were doing mobile payments. Out of the 1 trillion mobile money globally, 70% of that activity is coming from Africa. And so all of those users can easily be converted into crypto users because that's what they're already naturally doing, right? It's also a very large, largely financially underserved market, right? 370 million people are unbanked. And so they're eager for the crypto opportunities, the DeFi opportunities that we've just been talking about. And we've seen the result of this. Six countries in Africa are constantly listed in the top 20 high crypto adoption list. 13 countries are already exploring central bank digital currency. Nigeria recently launched the Naira. You already have 34 million crypto users in Nigeria, even within the context of a ban with respect to the regulators. Crypto users are still, and the reason why is because they're local problems to solve. And that's why these markets are important for crypto and for DeFi, is because the problems are specific to the markets. In Africa, there's a huge amount of volatility with local currencies. And so the average person does not want to hold local currency. They would rather own Bitcoin or stablecoin or any other store of value than the local currency. There's still very low interest rate options out there. So anything that can give them higher yields is a plus. FX controls is a big problem, and crypto solves that, right? One of the powerful reason why crypto is very political, and as obviously you guys will know, is because when you think about crypto, you actually don't need to go into the coffers of a central bank. So the average person that wants to make a transaction using USD doesn't have to go and buy USD from the local bank. They can just go get Bitcoin, and you can avoid having to pull USD out of the country. And that really actually changes the dynamics of monetary policy because suddenly now you have less people needing USD, and they can actually use cryptocurrency to make their transaction. That is a dynamic that is playing out, not in a big way in Africa because still there are regulatory restrictions. But fundamentally, if you think about what's actually happening, right, people are avoiding having to use USD and they're going into crypto. And that is a huge opportunity in markets like Africa where FX is still very hard to obtain. There's still capital controls. You have local currency debit cards that you cannot use outside the country because of capital controls. I have companies that I'm investing in that have built debit cards that are powered by crypto and allows people to now use these debit cards outside of the country with foreign transactions. That's a game changer for the average person. And then also limited access to global markets. the global liquidity pools that DeFi has brought is huge and can actually be put into some of these markets, right? Versus TradFi, right? We've seen how TradFi has limited access to capital markets to these markets. DeFi can actually be that plug. And then fragmented and costly transactions in these markets, with a lot of markets like this, you are seeing lots of opportunities for using stablecoins, using these cryptocurrencies for payment rails or blockchain to power payment rails and make it instant settlements, less costly and more borderless.
Awesome. So all these use cases, obviously they are disrupting the traditional financial system and the traditional banking system. Do you think DeFi will replace the traditional financial system, or how can it be helpful to the traditional financial system?
So I think it's a frenemy relationship, just like fintech was a frenemy relationship with the banks. I think there are threats. Like I said, there are innovations where intermediaries are literally just going to be disintermediated, right? Like we just mentioned, automated market makers, peer-to-peer transactions using crypto, avoiding regulators, avoiding, local, fiat currencies. Like all of that completely disrupts and changes the dynamics in terms of traditional finance. But at the same time, I'm investing in companies that are looking at building TradFi and DeFi, and we can go into some of the examples. But essentially, I look at companies that can, bring fiat crypto rails together. They can bring banks into the blockchain, fintech companies into the blockchain. They can help, for example, I invested in a company that allows people to swap airtime to digital currency. So they're bringing people out of mainstream into the crypto world. So I think to drive mass adoption, we do need this frenemy relationship where we can bridge the gap between TradFi and DeFi, and we can create infrastructure that bridges that gap to bring in more people and more adoption of crypto into the mainstream.
Seems like you are making very, very attractive investments. So Barbara, how do you source your deals and how do you help your portfolio companies to grow and scale?
The biggest, the three key things we bring to our portfolio companies is one, we have domain expertise. And I think I would urge investors to invest in funds that are disciplined and focused. So I've always been very passionate about investing in financial infrastructure and creating a synergistic portfolio that does that. And, it's important to have that domain expertise so that you can be very clear what type of companies that you're investing in and what type of value add you bring, and it attracts the right founders to you. So I think that is a key thing that we bring to our portfolio companies, is that we have that domain expertise, our team. The second thing is that we have operated in these regions, right? My experience has been very Pan-African. A lot of people don't have Pan-African expertise. They have expertise in different regions, but not across all the different regions of Africa. And a lot of people struggle with Africa because they don't know how to scale across the continent. Right. So that's a big value add. Our portfolio companies are constantly asking us, how do we get into Kenya? How do we get into Nigeria, South Africa? And that's the value add we bring. All our portfolio companies have to scale across Africa. That is the mandate that I bring to them. And because we want to create big companies, regional champions, and also we help them scale in other markets outside of Africa and Asia, in Latin America. And then the third thing I would say is the ecosystem we bring, because we're investing in infrastructure companies, like I mentioned, like I shared in the slide. These are companies that are interacting with the broader ecosystem. They're interacting with blockchain protocols, telcos, banks, businesses, corporates, consumers. We try to help enforce that distribution by giving them access to blockchain protocols. One of our LPs is a blockchain protocol called Celo, and we help some of our portfolio companies build on the Celo platform. And also we work with other blockchain protocols as well. We work with banks, we work with telcos. We bring all of that to our founders to help them scale and become more integrated into the economy. That's the goal.
Awesome. So obviously, all the investors, including our investors on this call right now, we are here to make a return on our investment. What do you expect all these companies to grow to, and why is it lucrative if you think it is?
Yeah, I mean, the most important thing for investments, right, is to come in early. I say come in early and ride this wave of this new market opportunity. I think we're seeing it across the board. From a macro perspective, we're seeing these continents grow really fast. The population, the demographic opportunities. And then from a micro perspective, this opportunity around DeFi, around fintech and crypto is sort of the winning thesis within the macro, right? Because it underpins all the transactions happening in the economy and all the financial services opportunities. That is the largest opportunity in this continent. So I always say that I invest in the macro, but most importantly, I've chosen the best micro opportunity in this region. And that's why, you know, if you invest early, you can ride the wave of this opportunity and get really good returns. I will also say that we've seen the crypto winter, right? We've seen how hard this space has been in terms of, because it's new, because it's early, there will be failures. There will be people who are learning and going through the motions. But I will say that we're very focused on real world applications. And I think a lot of the crypto madness that's happened has been about crypto for crypto's sake. We're really focused on how does this solve real world problems, and how can we ride those real world, how can we solve those real world problems so that we can ride the wave as these macro economies, as these economies sort of get better from a macro perspective. As long as you're integrated into the real world, you will get those returns. And then I would say the biggest thing with investing is making sure you're getting exits. And with a lot of our companies, because we're focused on this DeFi opportunity, this lucrative opportunity, there's a lot of strategic interest, right? I would say the most important thing about the blockchain is that everybody has to collaborate. All layer one protocols are multi-chain and bridging with each other. Applications want to run on every layer one. There's a lot of collaboration. And so for me, when I create a portfolio, even on a venture capital side, I still have to make sure things are synergistic. And I think that creates strategic interest in a lot of the companies that we invest in. And we're seeing that. We've invested in companies that have seen a lot of markups. We're seeing strategic offers being put in place to some of our companies. We're seeing blockchain protocols wanting to scale in these regions, wanting to buy or invest in some of these companies. So there's a lot of strategic opportunities, and more importantly, that leads to exit opportunities for our investors.
Definitely. And I really agree. I can't agree more on your point in terms of this is not about get rich quickly. This is about solving real world problems, and wealth creation will come with this process, right? So because there are so many opportunities and there are so many issues that needs to be solved with the help of blockchain. But I do have to bring it to the other side of things because there are risks and there are challenges. I see there's one question in the chat box already from Lee. Can you speak a little bit to the regulatory landscape and regulatory risk, and also some of the other risks that you are seeing?
Yeah, I can start off with the regulatory piece. I think the biggest challenge with the regulatory piece, right, is that a lot of regulators are skeptic about cryptocurrency. I've already told you some of my philosophy around why, right? Because it definitely changes the game. It changes their jobs, frankly. In Africa, I would say a lot of regulators are mutes when it comes to this. So, South Africa, cryptocurrency is legal. Mauritius, it's legal. Kenya, it's legal. They're usually mutes, but some regulators have specifically put bans in place. Nigeria put a ban and said no banks can transact with crypto firms. Now, even within that context, there are 35 million users in Nigeria of crypto in Nigeria, and that's honestly not counting a lot of the informal activity. And that's because a lot of the crypto companies we invest in, they're building outside of the bans, right? They're build peer-to-peer platforms where they don't need to work with some of these centralized authorities anyway, right? But at the same time, the Nigerian government the SEC has also created some guidelines around digital assets. So anybody who's issuing digital assets has to be registered with the SEC. So every country has different ways of looking at crypto. What we advise our founders is to make sure they're building to be future-proof for these regulations, regulatory environments that they're dealing in. And we also create a portfolio where we are diversified so that we are not only investing in companies that are regulatory required. We're investing in infrastructure companies that can scale across different platforms, and they don't have to be under the purview of the regulators. So we try to create a diversified portfolio so that we manage our risk around regulations.
Got it.
I would say DeFi in general has a lot of other risk, and that's because we're still early in this game, right? There's security risk. We've heard a lot about the security hacks that have gone on in the system. And I would say it's not really about what the risks are, it's about how we can solve these risks and how we can start building to future-proof this technology. And so we need to start building to solve the security issues. And I think a lot of the protocols and big companies are really focusing on that. One of the key security vulnerabilities has been this bridge that people have been building so that they can create multi-chain solution. That has just happened in the last year, right? People have been playing with bridges. They haven't really spent time building, really secure bridges. And I think there's so many opportunities to solve this security issue. And then I would say there's still a lot of issues around the technology in terms of being more robust, right? Some of these protocols cannot handle the amount of transactions Visa can handle, for example, right? So to create mass adoption, we still need more scalable platforms. And there's a lot of optimization that needs to happen in the technology. Within the African context, one of the things people sometimes ask is, what about the internet penetration? And I think you asked that as well. Africa still has about 43% internet penetration, and you still need the internet for blockchain. But there are ways to solve that. I think a lot of our founders are creating solutions using agents. They're creating offline crypto applications. I'm even seeing a founder build an ATM to deal with cash and things like that. So this just creates more opportunities for innovation. I would say a lot of these challenges.
Challenges comes with opportunities.
Exactly.
And vice versa. So there are more questions in the chat box, more on the stablecoin front. Can you talk more specifically regarding regulation towards stablecoin, especially Tether? It seems like Tether isn't backed by US dollar.
Yeah, so the Tether issue, I think it's I can put in a chat a thesis that was a couple of people have put together. Not all stable coins are equal, right? Some stable coins are fiat backed and some are algorithmic backed. Tether was one of them, right? And if crypto prices go down and you have this sort of mismatch in terms of the pegs, this is the result of what you have, right? Or what happened with Tether. And I think there will be regulations around stablecoins. In the US, for example, there will be a lot more oversight on how stablecoins are going to be regulated. And look, I think the US in general is going to create more opportunity. Like they're going to probably put some reserve requirements for stablecoins, right? Because there needs to be more transparency. And I think a lot of people suffered with the lack of transparency, and that's why they lost money. They didn't see that a lot of people were short selling and withdrawing money out of the pools. There needs to be transparency. There needs to be some reserve requirements. There needs to be some things in place. We don't want to overly regulate, but we need to protect investors because investors lost money because they were not being transparent. So I think there will be some changes in that regards.
Great. Another question from the audience. This one is from Lin. In the absence of a regulatory framework for DeFi, can you talk about the value transfer risk associated with DeFi, especially the consensus risk?
Sorry, what do you mean by that? I'm a bit confused.
Well, Lin, do you want to explain the question a little further? Lin, can you hear me? So if I have to guess, this is more about how to reach the consensus, because when you are matching the transactions, obviously smart contracts needs to reach consensus. But because there's no standard, how do regulators adapt to that, and even consumers and everyone involved in blockchain and DeFi?
Yeah, I mean, I think this is what I mean by the regulators are going to come up with new opportunities here, because I think the reality is this has been opaque, right? Nobody understood this, and the issue that regulators are going to face is that they're going to likely have to over-regulate just to get people to come up with some standards, and then maybe lax some of those regulations over time. But there will be probably standards put in place, and it would likely come from the regulators.
Another question in terms of opportunities, do you see anything, any opportunities in the private equity activities? For example, maybe DeFi applied for distribution and exit, AML, KYC, et cetera, et cetera.
The blockchain could be interesting for us as fund managers, right? In terms of liquidity. So there are a couple of things. We all want liquidity as fund managers for our investors, right? So when you think about securitizing some of these equity investments we make, you can put it out on the blockchain, you can trade it. People are investing in tokens and getting liquidity from tokens. So there are opportunities for liquidity, definitely using the blockchain. I would also say that, the venture capital industry is being disrupted fundamentally through this opportunity in the blockchain. And you can see that through investment DAOs, right? I really like the concept of investment DAOs. I think they are a very interesting way of creating a collaborative investment approach. And also the community that these DAOs have are actually can be very advantageous to the startups that these DAOs invest in. So there's a lot of opportunities there that can actually change the model of venture capital and create more inclusivity in venture capital and more opportunities for startups to be plugged in to the DeFi community. But all of this requires infrastructure, right? DAOs, are treasuries. Some DAOs own, $600 million. There's a specific DAO that has like $600 million. You have to have all the right security, KYC, AML, treasury management, all of those structures in place to make these DAOs to become big. So we look at companies that are building infrastructure for DAOs as well.
Got it. Well, so there are more questions coming in asking about opportunities, but I'm going to go back to one of the couple of things that we talked about. You mentioned some of the exciting use cases that you've seen recently and you've been investing in. If you really have to choose one from all your investments, which one, or maybe you can categorize it, maybe it's one subsector in DeFi that excites you the most?
The most exciting for me are these protocols, these opportunities to use protocols for lending and for asset management and things like that. Fundamentally, what is the business model here? It's a spread business, right? It's a business of, getting money, lending it and getting a spread out of it, right? I think that business model is a big business model within the context of all this DeFi liquidity, crypto liquidity out there. So I love the concept of sort of bringing more liquidity sources into real world sort of transactions and creating new financial products. You can tokenize real world assets. You can create collateralized debt or obligations, pegging them to real estate, pegging them to securities. And then you can start using that as collateral to start lending and creating a huge arbitrage opportunity from a spread perspective. So I love anything in that vein of lending, asset management, and creating new financial products using DeFi. That's exciting to me. And I think because that just changes the game. And I think those opportunities will be in like 3, 4, 5 years. Those will be natural products that we will be using. And I'm really excited about those type of opportunities.
Great. So I do want to go through a couple more slides before we open completely to the audience to ask the questions. James, go to the next slide. So key takeaways. As usual, we always want the audience to have a couple of key takeaways to take with them from this podcast. So maybe give us your top 3 key takeaways that the audience should know.
So like in the slide says, the first one I would say is sort of the DeFi opportunity to me goes beyond cryptocurrencies and the actual currencies itself. It's really about how are we using these digital assets and the infrastructure underlying that. That is the biggest opportunity for DeFi. And I would say that that's the part that excites me. How can we build technology that can be more scalable, robust, secure, and embedded in our daily lives? The infrastructure that does that is going to stand the test of time. And when this macro environment gets better, those are the companies that are going to be leaders and driving and powering this internet economy. The second thing I would say is we need to drive mass adoption, right? And in order to drive mass adoption, we need to invest in key markets that will give us mass adoption. I fundamentally believe that Africa will generate most of the billion users of crypto that we're all expecting, and will transform Africa economically through a blockchain-powered ecosystem, financial system. So these continents are is a crypto continent, and the opportunities there are huge. The third takeaway I would say is invest early. This is the time, right? In the next couple of years, we're going to be talking about the category leaders of the new Web3 economy, and you want to have invested in one of them or participated in being part of the journey of one of them. And the companies, the category leaders that come out of this market, they would have learned the hard way. They would have gone through a lot, so they would be able to stand the test of time.
There's so much opportunities in DeFi. It's just getting started. The total value log, the TVL you just mentioned, is just less of 3 trillion. That's just the market cap of one Apple. It's just one company. So there's so much more room to grow. So if any of our investors wants to get started, how do they get in touch with you? And maybe just give us a little bit more around how your fund is structured, how many investment you've done, and where do you want to take your fund? Where do you think this will go?
Yeah, no, thank you very much. And just to quickly hone in on your point, the biggest opportunity here is to really drive mass adoption, both on the retail and on the institutional. So Unicorn Growth Capital, our fund, is really about investing in all the infrastructure that can do that, across all the building blocks of financial services across different verticals. We want to create infrastructure that's interoperable, based on open financial systems, open protocols, and is embedded in TradFi, embedded in Web2, and can be scalable. We're investing in seed companies, so we are looking at companies early because we believe this is still a very early ecosystem, lots of innovations. We're investing in first movers. Some of the companies I've been mentioning are the only companies doing that. The company I mentioned that takes airtime and converts that to digital currency is a first mover. So we're investing in first movers that have that advantage and can become the next category leaders, and create unicorns and become and create a lot of returns for our investors. How you can contact me, I have my email address in one of the slides, and I'm on LinkedIn, I'm on Twitter. I'm targeting a $35 million venture capital fund, and investing in about 25 companies. And yeah, I would love to talk to anyone who's interested in collaborating with me and learning more about this space.
Awesome. So I think we're gonna open up to more questions. I will start with one, Barbara, because today the podcast, the title is DeFi the Future of Finance? So do you think it's the future of finance, and why?
Absolutely, for a lot of the reasons I mentioned. The fact that we are creating these platforms that completely disintermediate centralized authorities, banks, and gives the power to the communities so that they can get more ownership, get more equity, get assets, monetize assets, and create opportunities to trade those assets. The fact that we can create more frictionless payments across the continent, make the world more borderless, and the fact that we can create more transparency. The blockchain becomes really important for data, for digital identity, all the core underpinnings of financial services that we have not still solved. To me, all of that is the future of finance, and it is going to transform the financial infrastructure of the digital economy.
Got it. There's one more question from Anil. So basically, he's asking the TVL, the total value log and volume in DeFi is still very low comparing to traditional finance and centralized finance. What do you think can create more volume for DeFi? What type of use cases will drive it?
Yeah, the numbers are very low compared to the grand scheme of the financial ecosystem. I mean, $20 trillion is in the financial services alone. And, we got to what, 100 billion this year. The bottom line is institutional adoption. That is our biggest barrier, right? Until we can get more institutionals into DeFi, these numbers are going to be low. And the reason why, one of the key reasons why institutionals have still not really used this is because there are no clear legal and regulatory frameworks. These frameworks are still moving around, and I think institutions are conservative. They need clarity. Once that clarity is there, institutional adoption will skyrocket, and we will change the game with DeFi. But the technology still needs to be robust to handle these institutions. High frequency traders require protocols that can handle millions of transactions and optimized, ways of dealing with transactions. So the protocols also need to do a lot of work, and a lot of applications need to be able to handle a lot of these transactions in order for there to be mass adoption. So it's a circular thing, but there's a lot of work still to be done to get more people into the DeFi space.
For sure.
So I have a question, if this is okay, if I can ask it
Go
this
ahead.
way. So you mentioned earlier that crypto is a form of democratization. So I guess my question centers around the fact that, so when you talk about mineable coins specifically, or certain coins that are issued, that are launched, so it requires a certain amount of technology to mine coins. And even if the coin is non-mineable, like with XRP, for example, we saw that the founders had a certain percentage of the coins that were in circulation. So what are your thoughts on that, and how do we deal with that moving forward if we're truly going to make crypto something that's democratized?
So you're talking about the fact that there's still a finite supply of these assets, right?
Yeah. So I was having a conversation about this with a friend of mine, and I used to be involved in crypto. I used to run an exchange here in Canada, and when it comes to mineable coins, there are people that got in early, and that have certain expertise that allows them to accumulate certain assets. So I guess my question is, like, is it really democratized, and sort of moving forward, how do we truly make it more democratized? Because it's the way I see it, it isn't necessarily democratized, because you require certain resources and knowledge in order to have access to it, right?
Absolutely, and that is the problem, and that is the challenge and the opportunity. We need to do a better job bringing the masses into this crypto space, and we need to make it easier for them to be able to adopt these technologies. Fundamentally, even the NFT space, I think the NFT space is very exclusive, actually. I don't think it's as inclusive as it should be, right? It's invitation only, only a certain amount of people can come into these communities and things like that. I think we need to there's a lot of work to be done to truly make it decentralized and to truly make it, democratized. But fundamentally, it's also not just about the currencies. It's also not about the NFTs. It's about the infrastructure and what we can do with the infrastructure to bridge that gap.
Okay.
Barbara, my question sort of relates to Jason's, actually. It was that, so as more institutional investors and even potentially governments entering the crypto space, how does that affect sort of the decentralization of crypto and I guess also democratization, as Jason was mentioning?
Yeah, I mean, the decentralization, it's a balance, right? And I had this conversation in my last webinar, right? Decentralization for decentralization's sake, right? We can't create the same problem with decentralization, right? And so the reality is, for me, the institutional investors are important for liquidity, right? We need that liquidity to drive the ecosystem, to drive these liquidity pools, to drive trading opportunities. But we also need to keep the power with the communities, with the people. People need to control their data. People need to control their wallets. People need to have the ability to transact with each other. We need to create that. That is the decentralization and democratization piece that we need to maintain. But at the same time, we need to balance that with liquidity and with the opportunities and expanding the ecosystem. So that's how I look at it.
Mm-hmm. Well said. Thank you.
Thank you, Barbara. Any other questions?
I have one question.
Go ahead, Eddie.
Thank you. So thank you so much for the sharing, Barbara. It's very helpful. I just have one more question. So right now, as of the situation right now, there are speculators and there are real fans of the DeFi and also the Web3. So how do you differentiate or distinguish the true opportunities and the speculations in the market? And my another question is kind of related. So although I know it's pretty subjective, but can you just give a very brief a timeline that you think the Web3 and the DeFi, for example, can reach a certain market scale, can reach to a certain certain degree, the market is truly flourish. Just I'm wondering what's kind of the timeline? Is that a long-term process or short-term process or pretty intermediate?
So the process of getting to a point where DeFi can really flourish, right, and get really big.
Yeah, it's a timeline, approximately 5-year, 10-year, and also the speculator thing.
Yeah, it's a good question. I talked to a legal person, a lawyer, who was saying that once the regulators start, coming up with guidelines on exchanges and stable coins and they, approve ETFs and things like that, we're going to see a step change with DeFi and crypto in general. So I do think it's one of those things where when it does happen, things will actually happen really quickly. When there's some shocks in the ecosystem that can sort of change things. I think this is within 5 years. I don't think this is a 10-year conversation. I think in the next 3 years, we're going to see some regulatory changes, and we're going to see some, DeFi really evolving and becoming really embedded in the ecosystem. I think speculators, to me, is a broad conversation about the intentions of what we're doing here. For me, I believe this technology is powerful, and we need to make sure that we're building applications with the right intentions. It is very challenging when you have people who are just sort of trying to scam the system, and they're speculative and shorting and doing all sorts of things to sort of drive the markets in different ways. The best thing we need to be doing right now is to create tools to be able to solve some of these issues. And there are some infrastructure companies being used to solve those problems, to sort of mine scammers, to check to see if people have done security audits, applications have security audits, to check KYC. I think we're going to need some of these tools, and the regulators are probably going to need some of these tools to ensure that we can keep this ecosystem honest.
Great, thank you so much for the questions, and thank you, Barbara. So we're running a little over on time. James, why don't we go to the last slide? I want to make sure that people have Barbara's contact information, and also my contact information, and my co-founder Mark's contact information. I'm sure you may have 1,000 more questions regarding DeFi probably after this discussion. And again, we hope that this will make you more interested in DeFi and Web3 in general. We do think there are a lot of opportunities, and welcome any other questions. Feel free to email or contact us afterwards. So again, Barbara, thank you so much for your insights. Thank you for joining us today. And thank you everyone for tuning in to this discussion, and thank you for the wonderful questions. Have a great rest of the day, and we'll see you next Thursday. Thank you, everyone.
Thank you.